Okay, terrific. Hello, everybody. I'm Lou Kerner with Crypto Mondays, which is now in VR. And along with my partners at DAOfest, I'd like to thank you for joining us for today's conference call titled The Current State and Future Outlook for DAOs. Per the call invitation, we're experiencing an explosion of DAOs since the MolochDAO was launched in February last year, and other platforms are rapidly evolving as well. Personally, while I've been working with various DAOs for a while, it really wasn't until ETH Denver last month that I really woke up to how quickly this ecosystem was developing. So I'm excited to be joined on this call by four friends and thought leaders in the space who will share their experiences and their views on DAOs, including where we've come from, where we are, and where DAOs are headed in 2020 and beyond. Each of our speakers are going to talk for about 10 minutes. And we'll spend the last 10-15 minutes of the call taking questions from the audience, which you can submit at any time via the chat app on Zoom. The call is being recorded and will be available for replay tomorrow via the Crypto Mondays TV channel on YouTube. So we're going to start the call today with Aaron Wright from OpenLaw and the LAO, followed by Matan Feld with DAOstack, James Waugh with MetaCartel, and we'll finish with Griff Green with the Common Stack. This is truly a global panel, as Aaron and I are in New York, Matan is in Israel, James is up early in New Zealand, we're at 6 a.m., and I think Griff is going to be dialing in from Berlin. So with that, I'd like to hand it off to Aaron Wright. Aaron, want to take the screen?
Yeah, absolutely. Thanks, Lou, and it's a pleasure to be on this event with you, Matan, James, and Griff. Just by way of background, I'm a co-founder of a project called OpenLaw, which is putting together a LAO that I'll describe in a little bit more detail over the next couple minutes. I've had a deep experience in the blockchain space, played a small role helping to launch Ethereum. I've worked with a lot of great projects and teams over the past couple years, including helping in part Joe Lubin think about how to set up consensus. And really from the beginning, of Ethereum, there's always been a conversation about DAOs. And I think the reason that's the case is that we realized pretty quickly when setting up Ethereum that it really had all the constituent pieces to not just manage the transfer of digital assets, but also to help build new forms of organizations. Vitalik included references to DAOs in the Ethereum white paper, building on the work that Dan Larimer of the EOS fame now started to think about with DACs, or Decentralized Autonomous Corporations. And the reason I think folks began to think about that is that there's just kind of an implicit knowledge that humans really do their best work in communities, right? And for thousands of years, communities have banded together to form guilds, associations, partnerships in order to achieve a social or economic goal. And these entities really form the foundation for economic and social life. So it's great to be able to move around assets, but really pooling those assets together and having groups of people direct where those assets can go is really what powers both the economy and also various different social organizations. And organizations have evolved over time. And really with each new era of innovation, we've seen new ways to coordinate human activity. So the age of exploration really birthed the joint stock chartered corporations, which were issued by governments. The industrial era, particularly in the US, created joint stock companies, or companies that didn't need to be specifically chartered by a government in a formal way. The railroad boom birthed preferred shares, which is really the cornerstone of venture capital and private equity and a whole bunch of other forms of organizational structures. And the oil shocks and the growth of global finance really led to the birth of limited liability companies. Our argument and our hypothesis is that blockchain technology more broadly is going to lead to another form of organization, and that organization is a DAO. And really, Ethereum needs DAOs. So for Ethereum to fulfill its vision, even in these troubled times, we need a way to pool capital and to deploy it for profit, not just deploy it for grants. Providing grants is amazing. It's really important, but it provides pretty much a weak incentive for folks to coordinate online. So we need to do that in a way that folks can actually make a profit by doing that. And DAOs really do fulfill this mission and vision. They represent a new way for open source projects to fund their development and to manage the creation and deployment of tokens for decentralized protocols. And I'll unpack that over the next couple minutes. In our view, really, MolochDAO was the beginning of the rebirth of DAOs. There's a number of great projects that have experimented with DAOs. But the beautiful thing, in our view, about the Moloch smart contracts and the Moloch initiative was that it was incredibly slimmed down on the smart contract side, and really pointed towards a point where we believe we can have effectively like an ERC-20 like standards, but for organizations. So we've worked with Amin and the Moloch folks and folks at MetaCartel to begin to extend out the Moloch v1 smart contracts and have released Moloch v2 smart contracts, which enable us to start doing more and more things when it comes to organizations. So we can pool capital, direct that capital to a third party, and also receive back some sort of asset, for providing that funding. So that means that you pretty much have the baseline pieces necessary to build a whole host of different organizations. And we realized that this was incredibly important, but also recognized that one of the early challenges with DAOs is just their status under the law. We know that you can't really build impactful organizations without reconciling it with the real world. And the tools that we've built at OpenLaw enables us to blend together the best of smart contracts with the legal certainty that many folks are going to need in order to either contribute capital or deploy capital into projects. And so by combining this together, legal wrappers with the underlying smart contract code, we can begin to expand the universe of DAOs. So many folks think that Bitcoin and Ether is a DAO, and we've seen other early DAO experiments with Maker and a whole host of other projects and a whole bunch of grant-giving DAOs. But once you're able to basically back up these smart contracts with legal documents, which give its members a limitation of liability, clarify rights and obligations, clarify tax-related questions, you can begin to start building a whole host of different things, including DACs, investment funds, various different media and fashion production companies, insurance pools, and a whole host of other initiatives that I imagine we can think of if we spend enough time doing that. The first really initiative in doing this, or kind of bringing this all together, was a project that we announced a couple months ago called LAO. It's really a rebirth of the DAO concept, the original DAO, which, if to the extent that you don't know that, was really just a venture capital fund that was being run on Ethereum. So the DAO attempted to pool together capital and provide that capital to projects who hopefully would make a profit and distribute that back to the members of the original DAO. The LAO works in many respects in the same way, except it does it in a way that complies with US law. So the LAO is going to be organized as a venture fund in Delaware. In the next month or so, we were hoping to announce that it would be March 25th, but Corona is going to put a little bit of chill on that, at least for a couple weeks. We'll have a public call for capital where folks can contribute 100 ETH and receive 1% interest in the LAO. Members can join publicly via public auction, and investment decisions will be based on member voting, relying on the Moloch v2 smart contracts. This is effectively the legal structure for the LAO. There will be this entity in the middle, which has all the members. OpenLaw will serve as a service provider, which can basically perform all the real world tasks that are necessary to administer a fund, including legal requirements and also technical requirements, and a bunch of projects, hopefully many of which become unicorns, will be able to request and receive funding from the LAO itself. The financing will be provided to projects on a take it or leave it basis. We are intending the LAO to provide startups with $100,000 in either DAI or Ether. The investments we structured as convertible notes with rights to receive tokens in the DAO itself. And we'll provide the legal automation tools for startups to organize and issue tokenized stock if that's something that they're interested in. So kind of on the front end, it will look like a normal DApp, but on the back end, all the legal tooling will be completely automated, which we think is pretty interesting. It's entirely member managed, so any member will have the right to nominate a startup to receive funding from the LAO, and if 54% or more of the LAO members approve a proposal to provide funding, the startup will automatically receive funding, and all the deal documents will be automatically generated on the back end. So that means that funding can happen, and a voting period is initially going to be set to either 3 or 7 days. So that means if you apply and you have a member that wants to fund your project, you could receive funding 3 days later. And it'll all be backed up by legally enforceable agreements. Members will have the right to rage quit, just like in Moloch, and redeem any undeployed capital at any point in time. At the time of exit, a member's pro rata right to tokenize shares will be held in an escrow maintained by OpenLaw. And existing members' interests will be resold to the public, and the LAO will be replenished. So I think this is pretty interesting. That means that you can pretty much have a fund that's continuous instead of having various different series of funds like we have today.
Hey, Aaron.
Yeah.
Yeah, and if you wrap it up, but also just real quick, and there are some questions that you can answer in the chat when you're done.
I didn't see them.
But did the MolochDAO, did they create the whole rage quit concept?
So I think they may, I don't know if Amin conceived of it, but it was implemented in Moloch. So I don't know the exact answer to that.
Yes, I think basically.
Yeah. I think what's important about that is it's very strong minority rights protection for any member. And it differs a lot from how funds traditionally work today, where LPs or folks that are providing capital will provide it on a periodic basis. And then if they provide that capital, it kind of gets locked in. So the general partner in today's existing funds, whether that's a venture fund or hedge fund or private equity fund, they have a lot of control over that capital. It's kind of inverted with a lot of these DAO structures where they're probably the most LP or member favorable structure that we've ever seen, which I think is pretty nice.
Wow. So cool. We've got time at the end, and also we can post. We'll post your slides up on SlideShare.
Yeah, absolutely.
You can see the whole deck. But thanks. It's super interesting what you're doing at the.
Yeah, absolutely. Let me exit out and stop sharing.
So Matan was going to go second, but he's actually asked to go last. So James, if you can go up next and grab the screens to share your slides.
Sure, yeah.
James Wow with MetaCartel.
Everyone, let me just do this. Share. Boom. Nice. Can you guys see that?
Yeah.
So this is a presentation that I gave at East Denver and then SCC on sort of the most recent circuit. The slides are less interesting than some of these sort of higher overarching questions. I think so Lou, for context for everyone, Lou sent over a couple of questions for everyone about sort of where the DAO space is currently at. And I think and a few things that Aaron touched on that's really interesting is really where we're at is this sort of like intersection of the rebirth of DAOs, right? I'll steal Griff's term. We had PTSD for a number of years, right? It's taken us almost 4 years to sort of recover from the massive DAO event. But now we're in this really nice space where, sort of Moloch launched last year. We've had some really good growth inside of the MolochDAOs in general. And MetaCartel more specifically has sort of, been blowing up amongst the community to sort of make the impact it's made. And I think one of the really big learnings from sort of the most recent circuit, which was sort of, a couple of months going from sort of Denver to New York to London to Paris, and then running back to New Zealand to hide from Corona, has been that, like sort of Aaron mentioned briefly, it is about the humans, right? We have technology's good, and new technological tools are really good. But at the end of the day, it is just about these people sort of coordinating. And really what Ethereum has is a bunch of people that, on average are sort of under 35, say, are really into technology, really into computers, have been around the Ethereum and crypto ecosystem for a long time. And now they're just trying to coordinate, right? They're trying to coordinate to build cool things. And really what MetaCartel, the MolochDAO in general, but then MetaCartel in a community sense sort of worked out and has pushed forward on is how do we sort of scale these communities, right? And not scale them to 1 million people, that's obviously ideal, but scaling them to 50 people, right, or to 100 people it is really the key. And the important thing about that is that they're not scaled in an open way, right? The way that tokens traditionally have worked is that someone buys a token, and then by buying that token, you're part of a community. Now, there's interesting mechanics and sort of game theory you can build into that, and you know, it is an option. But by building these more permissioned sort of subsets of communities, we're able to sort of keep that impact level really high. And so thus MetaCartel was born. So really MetaCartel is just a DAO with money in it that gives out grants. And we give grants to, you know, basically anyone that's doing cool stuff. It doesn't matter, you know, if you want to, for those that sort of saw the stuff on Twitter, there was a bunch of these physical boxes we made at East Denver that were filled with stickers, something like that, right? Someone joined the grant for, or someone joined the DAO for, or it can be something a little more, you know, tangible or online. You know, maybe someone has a project idea, the likes of Sablia or DeFi Zap, or these sort of novel new DeFi or DAO building blocks that are entering the space. MetaCartel wants to be there to sort of support them and give them a grant. So more meta than cartel, you know, so meta, a term in an MMO meaning the most effective tactic available is basically what works in the game regardless of what you wish would work. And that's really what the MetaCartel is about. So there's that graph on the right there, that's the CLRs from the last Gitcoin matching. You can see there that the average funding in the green that MetaCartel received was pretty similar, a little bit above the total average. But the CLR matching we got was way, way, way higher. For those that don't know how that worked, it was quadratic. So what that means is the more people that vote is the thing that matters. And what does MetaCartel happen to have? People. And again, this is sort of the whole point of the space, is that we actually just need humans in a room coordinating, and then we can see some really amazing outcomes achieved. So all the communities really over the past sort of year or 9 months now, I guess, inside of MetaCartel, and just over a year inside of the MolochDAO space in general, we've managed to spin up a number of communities, hundreds of Telegram groups, a lot of these different efforts. I'll just run through a couple of them, you know, for those that are interested. MetaClan is sort of this idea of a gaming guild, right? It's sort of guild of guilds inside of the crypto space. So we can sort of sit above all of the different crypto games and sort of, you know, make gaming guides, you know, stake players like poker. You know, we can collect NFTs and sort of find the most valuable ones. We can make breeding competitions, this sort of thing. MetaFactory is a project that you should definitely check out. It's basically, it's a hard short thing to describe, but basically it's an NFT that you purchase with some interesting purchase mechanics in game theory. And then that NFT, you know, you can use inside of Decentraland and MicroVoxels, but it's also a physical jacket, right? So we've actually had these amazing jackets designed, and there's sort of this real life jacket, this NFT which accrues DAI over time, and you have to delete in order to collect the DAI. And then there's this, you know, NFT in this game. Really interesting, sort of, you know, combining digital and real life apparel in a really interesting way. Metagame is sort of, you know, the gamification of life, and sort of the first steps into the MetaCartel. Really, you know, small tasks to sort of understand where you're at, and where the community's at, and then sort of help build around that. Raid Guild I'll talk a little bit about more in a second, but really it's a collective and we're providing work. Rocket NFT, for those on Twitter, hopefully you've seen Alex talking about that. It's basically giving out loans on the back of NFTs. Really interesting concept. DAO House is the sort of the front end for all MolochDAOs at the moment. MarketingDAO, again, it's had pretty big push from Consensus and hopefully some other folks soon. And it's basically looking to push forward Ethereum overall, right? So it's not a DAO necessarily like MetaCartel, which is just about sort of the application. MarketingDAO is literally just trying to market Ethereum. You know, when you go to like conferences and there's like EOS and they have a massive booth and there's like 40 people there and they're all paid to talk about EOS. Well, it's kind of bullshit. And so the point of MarketingDAO is that we want to, you know, have this collective that can sort of push forward Ethereum in a fair and equitable way. And then at the bottom there, that second little chili is MetaCartel Ventures, which I'll talk about in a second too. Community doesn't build itself. There's Peter Pan, who's the summoner of MetaCartel, has been a fantastic dude and has worked basically non-stop for the past 9 months, making MetaCartel what it is today. And having, you know, a few people, you know, it might be a DAO, but that doesn't mean that we make every decision on chain, right? A lot of decisions are made as a collective, and, you know, we sit there and we talk about things, and whoever's on the call ends up being the one making the decision, right? I mean, there's 70 people in the DAO, maybe only 10, 15 of them are sort of, you know, day-to-day working on calls. So DAO service providers, how long do I have? Let's see here, sorry, not very long. DAO service providers, you know, this is interesting, really interesting piece. Axie Labs, this is me. Ray Guild, this is all of us. Abridged, this is, they're doing DAO ops. Odyssey, do front end and back end. And OpenLaw, you just heard from Aaron. And really, you know, what we're all trying to do is just build the infrastructure for these DAOs to work out. This is the coolest one, I guess. We should go like this. So this is sort of the universe of MetaCartel. And again, actually all these statistics here have probably almost double since then. Or the DAO members is probably closer to 80. We've probably deployed about 100K worth of grants. Even in the past month, or, you know, the 2 months, the last circuit from Denver to ECC, we managed to deploy 20% of our guild bank, right, of the DAO bank. So we have 1,000 ETH in the DAO, and we managed to spin through 200 and then have 200 come back in. So, you know, it doesn't actually matter how much money you have if you can just deploy that money quickly and keep it getting it out the door. So there's a bunch of different efforts here. I'll upload these. Yeah.
I'm just saying, so I mean, it's amazing. It's a large and growing galaxy. Is there anyone that is, that you want to point to that's getting, particularly strong traction?
So, I mean, I think the Venture DAO has had a lot of really interesting hype around it. I think, you know, the Ray Guild as well. So the Ray Guild really is this meant to be the service provider of service providers. You know, we're sort of already straight off the bat at East Denver when we kicked it off, you know, the likes of Consensus, Aragon, a bunch of interesting people sort of coming and talking to the Ray Guild because, you know, and it's even for myself, right? We do a lot of sort of token engineering and that sort of thing. And working with different projects trying to improve where they're at from a token point of view, and actually being able to work inside of do that work inside of the Ray Guild has provided a heap of value because we can, you know, as opposed to sort of me and the team just writing out some sort of game theory, you know, writing out where your token should be at from an optics point of view. Now we can run that past all of the Ray Guild and these designers and backend and vice versa, right? So while they're doing the design work, while they're doing the smart contract work, they can run that by us and sort of see that everything makes sense. So I'd say the Ray Guild and the Venture DAO would sort of be two of the efforts, but MetaCartel in general, right? The DAO itself that's able to be consistently providing these grants down here, and there's probably another 10 to add to this list, or 5 maybe. But running out of time. Money versus signal. This ties in a little bit to what Aaron was talking about. You know, I think what MetaCartel is about having, you know, the signal of the community and having the people behind that. You know, giving a grant giving DAO might not be that sustainable long term, but what it is good at doing is sort of finding, you know, who wants to be in the room for the right reason. And you know, compared to the traditional model of coming in and you know, you want to raise money, so you go to the biggest, coolest VC and see how much money they'll give you and get their logo on your website, and then once you have their logo, you can get all the other VCs' logo. And you know, they're trying to get shady deals and get the cheapest tokens and blah 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 blah. Well, you know, what's the way to solve that? MetaCartel Ventures. So MetaCartel XYZ. I would encourage everyone to check out this website. It's a fucking hilarious website, but actually, you know, still has pretty serious roots in it. We have sort of 30, I think it's 30 or maybe 35, 40 founders from the crypto space, from, you know, token projects, auditing projects, you know, venture firms, and we've put them all into a DAO. And then we have, I think a couple of, well, it depends on ETH price, I guess, a couple of $100,000. But the point of it isn't the money, right? The point of it is being able to build this first experiment since the DAO of a for-profit DAO. And really, you know, push forward all these different founders in a way that actually makes sense, right? It's not just about maximizing profit. It's about pushing forward the overall Ethereum ecosystem. So MetaCartel Ventures has been a massive push over the past couple of months and really, you know, looking to be, and beside the LAO, right, there's going to be a bunch of these for-profit DAO experiments. You know, the MetaCartel Ventures is sort of the spin-off from MetaCartel, which is this grant-giving DAO. So it's sort of a nice flow, right? We can give a project a grant, then we can, you know, give them help through the Ray Guild in this decentralized way. Then we can give them an investment in a way that makes sense and isn't like shady. You know, this dude on the top left, this dude up here, like, oh, hey, I'm a VC man, I want to give you money. No, fuck that. We're nice MetaCartel flag, and we want to do it in the right way. So yeah, sustainable DAOs. Yeah, grants are giving, services provided, ROI is made, all in a way, and then you reinvest into the grant giving DAO, right? It's a circle of logic that makes sense. So yeah, that's basically it. I won't take up too much time. I know we're doing lightning talks, but yeah, MetaCartel is basically just a community of cool people that want to see the Ethereum space push forward and applications on top of Ethereum get pushed forward. And there's an amazing, you know, set of people and a bunch of different projects inside of that.
Okay, that's terrific. Thanks a lot, James. But Aaron and Matan just wanted me to point out that not everybody in DAOs is under 35.
Yes, yes. No, very fair. I'm being ageist. I apologize.
With that, I'd like to turn it over to Griff Green. Griff, you see there's a share button. I'm actually going to grab it, and I'm just going to put on the that, and you should just be able to start talking. So, Griff, you there? Going once. Cannot hear you, Griff, if you're there. I'm gonna go once, and if we don't hear from Griff.
Sorry, yeah, no, I was muted.
Okay.
I do have slides though, actually. I don't know if.
Okay, so there's a share button. If I stop sharing, you'll be able to share. There you go. Perfect.
Yeah, we're in.
Awesome. Slides.
Cool. Yeah, I that's my bad, because I told you that I probably wasn't gonna do slides, but I want to be normal like everybody else, you know. I want to be cool, so I figured I'd whip up some slides. And I'm also 35, so I barely make James's cut, but I'm part of a lot of DAOs, including MetaCartel and MetaCartel Ventures. I was part of the DAO, of course, originally. As a community organizer. And what excites me about DAOs that I think we're just getting into is that they're not only just like companies or nonprofits, but they can go a level deeper, and they can actually start allowing communities to manage their own economy. And that's what the Common Stack is trying to enable people to do.
So Griff, you know, when the DAO imploded, did you lose belief in DAOs or not?
Not at all, not at all. Because I have a lack of belief in governments and banks and corporations. So if we don't have DAOs, then we're kind of fucked. Oh, sorry about the swearing. I forget sometimes.
You're not the only one who's swearing, so don't feel bad.
Oops.
Ah, good. Yeah, I mean, I think DAOs are the only chance we have to really maintain our agency as a community within a larger, within larger systems. Governments and nonprofits solve a lot of problems for us as a society, but I actually think DAOs can just solve those problems better. And to really get into it, I want to just like briefly talk about what is an economy. What do we do with economies? What is the point? You know, economies have a lot of value. The economies are their own little ecosystem, right? And we use economies to distribute resources and incentivize behavior. And really, the best thing that an economy can do, in my opinion, and the most important thing that it does, is it rewards value creation. As in, like, when people are creating something that didn't exist before that helps out the rest of society, they can be rewarded through economic behavior. But our economies today are kind of weak. They don't reward everybody who's creating values. I'm specifically talking about nonprofits. Like, if clearly when a nonprofit does good work, they are creating value for society. But our market-based economies only reward behavior that satisfies an individual want and need. Otherwise, you suffer from tragedy of the commons issues. And this is where the commons stack comes in, because we want to create programmable economies that can scale from big to small, and or really small to big, and can be used as kind of global. They can be used by global cause-focused communities to incentivize the behavior that they want. Because especially in the nonprofit space, they just can't have business models. Business models don't work for nonprofits. That's why they're nonprofits. But we can create economic models. And that's the piece that I want to really drive home today, is that if you are creating value, then you can create an economic model that can incentivize the continued production of value within that community. Let me just click this. So, and some examples of that are basically any blockchain, right? And I will highlight, I'll highlight Primecoin. So Primecoin's kind of fun, right? It's a blockchain that to mine a block, you have to find a prime number. they created an economy around finding prime numbers. No one cares about prime numbers, but now you're paid to go find one. Okay, this is ridiculous. If you can make an economy around finding prime numbers, I'm pretty sure we can create economies around creating open source code, right? And so what our goal as the Common Stack is to take the magic that is possible with blockchain incentive alignment and bridge it to the real world. I'm not actually going to use the public education thing for this, but that's okay. So the way we do that in small scale economies is by using bonding curves. So I assume that most people maybe have heard of a bonding curve, but I don't think that everyone really understands why they're so fucking amazing, okay? Bonding curves would have, like everyone saw on Thursday when the price just started tanking in Ethereum and crypto markets across the board, right? And that's because, it's not because everyone wanted to sell. Obviously, I bet most people in this call wanted to hold. They didn't sell at all. The real problem that happened on Thursday was that some people wanted to sell and a lot of people, really no one wanted to buy. And that's this issue that happens, especially when you talk about small market cap coins, where there's a lack of liquidity. And this is where bonding curves really shine, because bonding curves solve the liquidity issue. They provide a buyer at any moment. So in our current two-sided markets, the price is free floating, right? You don't know what the price is going to be. It depends on how many people are buying and selling. And to buy or sell, you actually need to go find someone to interact with, to sell your shitcoin to, right? So, but if there's no one who wants to buy it, the price is going to go to the ground. In fact, if you have a bunch of tokens and no one wants to buy it, those tokens are actually worth zero, right? So a set number in a legacy market, you have a set number of tokens, and you have to hope that people are willing to buy them. This works fine for really large liquid markets, but it doesn't work fine for small market cap stocks and coins. And that's why the SEC actually limits people from just creating stock. Because if the little hot dog stand down the street tried to create a stock, no one would want to buy it. The price would go to zero a lot. The way bonding curves solve this, though, is that they, instead of saying, okay, here's some tokens, let's see what happens, they go in advance and they say what the price of every token is going to be. The price is algorithmic. So, and when I say the price of every token, that doesn't mean the future value of every token, but it means that if you want to go buy a token, you will go to the smart contract, the bonding curve smart contract. You will say, hey, I want to buy a token. How much does it cost? And it will go and say, well, if you buy one token, that will be the 101st token that exists. And my algorithm says the 101st token will cost $1. So then you send $1 or one DAI into the bonding curve, and you get one token back. And now if someone wants to come buy the next token, it'll say, okay, this is the 102nd token. My algorithm says the 102nd token costs this much. Go ahead and buy it, right? And so what's really cool here is when you send the money in, the money goes to the smart contract, and it's held there so that if someone else wants to come back and sell a token, then when they send the token to that smart contract, the token is then destroyed and collateral is released from the reserve, from the smart contract. In this way, you can imagine it being almost like an economic parachute for a situation that happened last Thursday. If no one wants to buy, it doesn't matter, because the smart contract is there holding collateral, and it can sell those tokens. It can destroy tokens on demand, and every token that exists has collateral backing it.
Hey, Griff.
Yeah.
And again, thanks. It's a great talk. Let me ask one question, and then if you can write it down to leave time for Matan and questions. But have you learned anything from what we've just seen happen to MakerDAO and how everything that went on?
With MakerDAO, it was definitely a liquidity issue again with their keepers, but it's not. I wouldn't say it. I mean, what I learned the most from MakerDAO is that we really need to take our complex system design seriously. There are a lot of moving parts in MakerDAO, and when we create complex systems, it's hard to know what will happen when in every little piece. And when we create complex systems in the real world, we generally use simulation software to model these systems. And we can find out issues with our designs or potential problems that could happen in our designs by running these simulations. And I hope that we are woken up a little bit to that kind of design validation because for the most part, people in the crypto scene, system designers in the crypto scene come from the computer science background. And there you can just make a pull request and change the entire system all at once. Facebook could make a pull request and their entire website will change. But in a blockchain, you can't do that. Blockchains are hard to change and they're difficult to change. And and there's a lot of money riding on the line. You can't just make a change. So you have to do some more design validation and planning before things get into it.
Interesting. Thanks. And thanks for sticking around for the Q&A part, Griff.
Sure.
And then our last speaker before we get to Q&A is Matan Feld with DAOstack. And so Matan, you should be able to hit the share button and grab the screen. Matan Feld.
Here it is.
All right.
You see that?
Yep.
Okay. Just see, making the presentation. Can you see that now?
Yes.
Okay. So I'll just stick to your questions. So firstly, where have DAOs evolved from? So this is just for contextual background. I think actually,
and Matan, just real quick, because I think everybody's got an interesting background, but you in particular have an interesting background what you were doing before you got into DAOs.
Right. So I'll mention that. So I've came from the academy. I've been doing theoretical physics, if you know string theory. So I've done my PhD in postdoctoral research in string theory. And in parallel to that, actually, I've been involved in cooperatives. I founded local organic food cooperatives and communal gardens, and I was particularly interested in cooperatives. And when you think of where DAOs evolved from, like the first immediate answer is, of course, from smart contracts. When the first people thought about, well, smart contract implementation, basically Vitalik Buterin and a few others, then one of the most immediate and exciting use cases were DAOs. So back then it was kind of like imaginary creatures. But if you think about it more culturally, DAOs really came from different places or were based on different cultures. One of them is, of course, cooperatives. For me, that was my entry point. I was involved in and interested at cooperatives for about 20 years. And when I saw Vitalik's white paper, this is the first thing to come to my mind was, okay, that's how cooperatives going to look like in the future at scale. So millions of people cooperatives, digital cooperatives. Of course, it also grew on the culture, on the shoulders of open source culture, collaboration, open source collaboration. But also, I think much of it was impacted by the movement of social networks, the open discussions of large groups. And another angle is the common-based pre-production, which is a very favorite angle in some communities. So what did we see, in the last few years that is working, and maybe something that are not working, or most things that are still not working? So firstly, what's working? I think the most important thing is the signals of interest and passion. Like, it's quite amazing that with almost no, real product. If we go back to the DAO in 2016, which Griff was involved in, and I was involved in submitting a proposal to, then it was quite amazing. There was this product, the DAO, that did not have an interface. And it was like as shitty as it can get. And it raised $150 million. So the passion, the level of passion and interest is just insane. And we still see it today, even after the conservatism that came after the hack. We have platforms. Yes, we have nice platforms, Aragon, DAOstack, Colony, Moloch, Common Stack, and all are nice platforms. But to be honest, all of them are very, very early stage, not platforms you would think users would use in 2020, and still hundreds of people are passionate around that. So I think the signals of interest and passion is incredible, which is good. It's critical. Then in terms of simple governance flow, I think, just like running decisions, I think we got it. Like, yes, there are many ways, and I'll also mention some problems and many different modalities, but overall, I would say, yes, we know how to make decisions on the blockchain, and that's good. And also, we have simple DAO platforms. Well, they can organize information. We have dashboards. We can know how to run voting, financing, some of which Griff has mentioned. So these are kind of like working. What are the challenges? Firstly, I think the biggest one is mainstream, and specifically the UX or Web3 UX. So still, there is a too large of a distance between the UX that the blockchain provides us and the mainstream ability to actually use it. I think there is still too big of a gap. Of course,
Tom,
yeah.
Have you learned what have you learned from MolochDAO and the success that they've had in terms of kind of the road to mainstream?
Well, I don't know. I learned a lot from MolochDAO. I'm not sure specifically about the mainstream. I think MolochDAO is still very much oriented at the crypto communities. I will actually double click more about that in the next slide. But I think one thing that I did learn actually from MolochDAO is simplicity. Really, really simple interface. Still, I don't think it's adapted for mainstream, but I think simplicity is a killer thing to take into account if you want to reach the mainstream. So yeah, a second I think big bottleneck is large scale. Of course, we see platform that can organize 50 people, but we haven't seen, and I think DAOstack is trying to push that to a few hundreds, but we haven't yet seen really DAOs of few hundred active members or thousands of members. I think this is a big opportunity, but it's still a challenging one. Mm-hmm. I think orientation, complex decision, context. We've seen DAOs that are making simple decision, yes, no about this decision, but we didn't see yet the toolings that allow a DAO, a collective intelligence, to make contextual decision. This decision X given that decision Y, this decision X inside of decision Y, and so on and so forth. We haven't seen that yet. I think this requires more toolings that we don't have yet. I think incentive design, a lot of people are speaking about incentive design, and we have made a lot of mileage on that. Yet I wanna say out loud, I think we don't have very good designs for DAO yet. It's kind of like the DAO business model. So DAOs are still not having sustainable business models. I would say we don't have a true product market fit. We are mostly based on enthusiasm of early adopters, which is good, but we don't have real product market fit yet. And then of course also community dynamics is something that is challenging always and still in DAOs. So my unique perspective, I'll try to draw a few of them. So one's of course scale, which is our strongest focus, I would say. And so we have our solution for that, which we call holographic consensus. We have an early version of holographic consensus, and we will release this year a much more advanced protocol for that. I'm sure there other people will come with other solutions, and I'm really anticipating to see them. I think another unique perspective.
Can you just give a real quick description of what holographic consensus is?
Sure. Holographic consensus is just, so the simple tension on your face is basically, if you want many people to be really engaged in DAO, it means that not only they're voting. So let's say you have 1 million people, just for the sake of it, and they're voting, but they're really engaged such that you also have 1 million people proposing, which means that you have every time you have 1 million people, 1 million proposals on the table. Now, how do you screen 1 million proposals? If you have 1 million people screening 1 million proposals, or even just 10,000 proposals, it means that each proposal will see very little fraction of voting. And how do you ensure that the results of those voting actually reflect the larger majority, is in coherence with the larger majority. So holographic consensus is a protocol that basically let you make decision by small audiences. So 100 people can make a decision for 1 million people, but in a way that guarantees that those 100 people decisions actually reflects the million people opinion. And the way that it happens is because there is a whole prediction market running on the side with professionals like traders, and they basically are constantly making bets or predictions whether the little group's decisions actually reflect or represent or representative of the larger group opinion. And whenever they don't, those make predictions that signal out the misalignment, and also in a way don't let those decisions to be approved. So this is roughly a 1 minute on holographic consensus. Another unique perspective that I'm really running strongly into is the conversation between UX and decentralization. So for a long time, we were insisting on full decentralization, and we're paying with lousy UX. And I think that if we are going to go to the mainstream, firstly, we have to not compromise UX, but also we can compromise a little bit about decentralization, because for the mainstream audience, it will be somewhat forgivable. And then thereafter, over time, as the technology matures up, we can maintain the level of UX, but get more and more decentralization. So I'm leaning more towards compromising a little bit decentralization and not compromising UX, so that I can go to address the mainstream. Now, I think some angles here is that most of the efforts so far were been placed on more corporational aspect, or if you want, maybe gig or open source collaboration aspect of DAOs. So a bunch of people working together to produce something. And I want to argue that DAOs could go much, much more into the social realm. So more like Facebook groups that are self-funded. And this is also conversing with professionals versus freelancers versus anyone. And I'm arguing that we can drive DAOs right now to anyone, to mainstream. This is also related with the way that people interact with information. So when you speak about hundreds of professionals, they want to all be involved in the project. You're more leaning towards dashboards, which gives you high level of orientation, but less flow. Or I think, and I'm claiming that when you go more to the social element, to the mainstream, to the large scale, you would start interacting with the DAO more via feeds. You have less orientation, less control of the information that you gather. You don't see the full picture, but you can flow much faster into it. And this also converses with the idea of going mobile first, integrated chats, engaging applications and notifications. What DAO will evolve into in 1 year, or in the end of this year, in 5 years. So I'm predicting that in the end of this year, we'll have the first real product market fit. So real DAOs, sustainable DAOs, I would say with over 1,000 members, and out of them, 100 will be active, like truly active members. We will start to see replicable models. We'll start to see early mainstream DAOs in the mainstream. And in 5 years, I think we'll see the DAOs are the mainstream. I think we'll get to around 100 million users in 5 years, or tens of millions if I'm a little bit more conservative. I think we'll see wide adoption, wide area of use cases. And finally, just to close it up, just showing you, so you already got my unique perspective, so I can show you where we're driving that perspective. So basically, we are launching a new project, which is now in advanced stage of building. We call it the Common App, and it's basically just that. It's taking DAOs to the mainstream around cost-driven collaborative networks, something like social networks, but with funding and collaboratively managed. So these are just early screens. I will not go into deep with them, just showing some pics and feelings of them. So you can browse through different groups, to different commons, and you can get into them and see their stats, and also the proposals that are made in there. You can go into proposals and read them. You can vote with a simple click. You don't need to know anything about blockchain. In fact, you don't need to know that this is running on the blockchain. You don't see the blockchain. It's all Web 2 level UX. And you can see sort of like it can be a Facebook campaign that is funded to grow further the common. You can see there is a thread of posts. Anyone can place a post. You can comment on post, have a discussion. you can found your own common, and of course then start to share it with friends. And you can, it's sort of like, I would say Facebook meets Kickstarter meets, or GoFundMe meets DAOstack. So you have this sort of like social group element together with the campaigns, funding campaigns, together with the governance of the funds reach. So you can have like sort of like campaign funding goals. Once you reach those funding goals, suddenly the funds become available for usage for the DAO. And then, as I mentioned before, the interaction with the DAO is mostly happening through a feed where all the information streams to you rather than you looking for that information. So I think we can stop here.
Okay, that was great. So thanks a lot for that. So now we can go from questions from the audience. Let's see, if you got a question, just raise your hand in Q&A or put something in chat. And I'll ask the next question to the degree. Hold on a minute. We've got a few questions in the chat. Let's see. The DAO hard fork. No, I think that was more of a statement. Well, let me ask you something. So in terms of what you guys are working on, and Aaron, I'll start with you at the LAO. What project are you most excited about in terms of that is going to use the framework that you've outlined?
Sure. So we've been lining up a bunch of different projects, both emerging decentralized protocols that intend to have a token, along with existing protocols that want to string up a DAO for fundraising purposes. So I don't want to announce it quite yet, but I think that's really what I'm the most excited about. I think in many ways DAOs are a better way for projects that want to build open, decentralized, token-based networks to raise capital, to receive funding for what they need, and also to build out the constituent parts of an open network, either through grants or by supporting initiatives that are building on top of it. So I think that's probably the thing that I'm most excited about.
Cool. Matan, James, Griff, any of you guys want to add anything?
Yeah, I mean, I think like to add on to that, I think that really is, and what I just said in the chat actually, is that idea of DAOs becoming the natural token distribution. Like if you have a project, you don't just raise, put an address up on a website and raise $1 billion, and then collect the $1 billion and then go on your merry way and try and build something around the token, versus sort of raising that money into a DAO and then sort of having the ability to rage quit if certain milestones aren't hit. Having transparency over the finances. The idea that these tokens raised money and then aren't being transparent about their finances is completely insane.
Right.
And so I think that'll be one of the really big next steps as well. I agree totally, Aaron.
Yeah, I mean, I think that's the key, right? I think rage quitting. Since we talked about this before, and for those that wanted to know the answer, it was provided in the chat. I guess it was arguably in the first DAO, and also Vitalik, not surprisingly, wrote about it. But for many of these token projects and ICOs, the capital was deployed and we don't know what happened with it. People should have the ability to basically get their capital back if they're not happy with the direction of the project. So I think that's super exciting. I also think what's nice about what we're doing and what MetaCartel's Ventures is doing is that we're trying to do it above board. I think we saw the same evolution in earlier eras with Bitcoin. Like Mt. Gox was pretty amazing. It kind of built the business model for exchanges, but it had tons of security issues like the DAO, and also had questionable questions related to its legality. And Coinbase kind of wrapped that up, right? They figured out how to do it in the right way in the US, and other exchanges figured out how to do it the right way in their local jurisdictions. And now everybody can talk about digital assets. I think we need to do that with DAOs, really to kind of make sure that Ethereum remains a healthy community.
One of the other questions is around decentralized exchanges. I'd love to hear your guys' thoughts on where we are there, and do we think this is going to be the majority over time, or you think that they'll continue the vast majority to be centralized?
I think.
Yeah.
Sorry. Go. Okay, I think decentralized exchanges are the future. They're too easy. I mean, Uniswap is there. They provide liquidity for small market tokens, and there's so many decentralized exchanges that are working on it and getting better. And you know, decentralization is generally not like it's not a check mark, it's more of a spectrum. And when I think decentralized exchange, I really think non-custodial. And for sure, there is some really nice UX that you can get if you have a centralized exchange where you let someone else hold your funds. But the non-custodial nature of a decentralized exchange is so valuable and so nice. You know, it really, like if you're an insurance company, you would give someone a lower rate if they use decentralized exchanges. So like in the end, that will, I think, win out.
Agree.
Anything else?
Yeah, I mean, I think decentralized exchanges are important. I think Uniswap has exceeded at least my expectations and how fast we could build a decentralized exchange that actually worked. I do think that regulators are going to push back pretty heavily on non-custodial exchanges. You know, for those that have been paying attention, they're implementing the travel rule on custodial exchanges, so they have to share information about transacting parties. That's going to be implemented in a number of jurisdictions. So there's an open question as to how you know, decentralized exchanges will fit into that. I think for DAOs, though, you know, one thing that's needed for decentralized exchanges to build a liquidity pool. If many of the assets that are being traded have questions related to their status under the law, actually providing that liquidity through a DAO, particularly a DAO full of accredited investors, will probably solve a lot of those regulatory challenges.
I'm just going to have to jump off. So thank you so much, Lou, and all the attendees and all the other panelists. I got another thing to jump on, but thanks, guys.
Okay, thanks, James. And actually, as I said, we were ending at the top of the hour, so I'd like to thank all the speakers. James, you may already be gone, but thanks a lot, Griff. Thanks a lot, Matan. Thanks a lot, Aaron. And thanks for everybody who joined. The call will
Thanks,
be
Lou.
play on
Thanks,
Crypto
Lou.
Mondays TV on YouTube within 24 hours.
Thanks, Lou.
Thanks again.
See everybody.
Thanks. Thanks,
Bye,
everyone. Bye.
Bye, James. Bye, Griff. Thanks, everyone.